Hi everyone and welcome back to Simple Finance. So in this week's video, what we're going to do is look at whether it's a better idea to overpay on your mortgage or invest the excess cash that you have into the stock market each month. So my name is Rory, I'm 41 years of age. I've been a homeowner for almost 20 years. And for the last 5 or 6 years, I've been investing my money into the stock market. So I have a good experience built up of both being a homeowner and investing in the stock market. So from time to time, people will ask me whether I think it's a better idea to overpay on their mortgage or whether they should take that excess cash and invest it into the stock market. Now, it comes down to two things really. It comes down to numbers and emotions. And what we're going to look at now is the pros of overpaying your mortgage and then the negatives. So in terms of the first advantage of overpaying on your mortgage, that would be that you're going to get a guaranteed return. So if your mortgage interest rate is currently 4%, for example, every time that you overpay on your mortgage, you're getting a guaranteed return of 4%. Now, if you invest in the stock market, you may be able to get a much higher return, but it's not guaranteed. The next advantage of overpaying on your mortgage is that if you can decrease your loan to value, you may get a better rate when you go to remortgage. So typically, if you have at least 40% of your home paid off, you will open up better and lower interest rates for your mortgage. The next advantage of overpaying on your mortgage is that it's very simple to do. So when you open up an app on your phone, there is usually an option for your mortgage that you can overpay. It's very easy to do. You can set up a direct debit and you can overpay very simply. Only 40% of UK adults actually invest in the stock market, so they won't need to learn about how to invest. They won't need to know what to invest in. All that they will need to do is just overpay perhaps £50 or £100 a month on their mortgage. So it's very simple to do. Now, if we go back to 2008, since 2008, mortgage rates have been incredibly low. We're talking 1.5% for your typical mortgage. Now, if we fast forward to about 2 years ago, mortgage rates have went up to the point now they're at 6%. So we can see that we're getting very close to a break-even point here. If you overpay on your mortgage and it's 6%, you're comparing that to getting a rate of perhaps 8 to 10%, which isn't guaranteed. So we're getting very close to that break-even point. So if mortgage rates have went up, that's an advantage of overpaying on your mortgage compared to getting what is not guaranteed in the stock market. Now, if you have a record of overpaying on your mortgage and then you fall upon hard times, there's a good chance that if you speak to your lender, they will give you a payment holiday. So you have a good record of being on time with your payments and actually overpaying. So there's a good chance that they will give you a payment holiday if you fall on hard times. So now we're going to look at the disadvantages of overpaying on your mortgage. So one of the things to bear in mind is that interest rates are 6% now, but they're not always going to be at 6%. As I said, if you can get better rates every time you remortgage, there's a good chance that your rate is going to go down. So we can't really compare the rate that you're paying now to the rate that you're going to be paying in 5, 10, 15 years' time. So what I would say is don't always think in the here and now. Look at what could happen in 10, 15 years' time. Now, historically, the long-term average of the stock market is 8 to 10%. So it is considered a better use of your money to invest your money, to have it working harder for you so that it can compound over time. And when you turn 60, you'll have an investment portfolio that's going to help you to build the sort of financial future that you want. So another disadvantage of overpaying on your mortgage is that you're not able to benefit from tax efficient accounts like a pension. So if you're a basic rate taxpayer and you pay money into a pension, the government will give you what's called tax relief. If you're a basic rate taxpayer, they're going to give you 20%. So for every £80 that you put into a pension, they're going to up that by £20 to 100. So that's a guaranteed return that you will be able to get. then you will be able to invest that money in the stock market and hope to get somewhere in the range of 8 to 10%. So these are tax efficient ways that you can invest your money for the long term. When you compare that to overpaying on your mortgage, you're getting 4% basically, if that's what your mortgage rate is. Another disadvantage of overpaying on your mortgage is that once you have paid that money to the bank, that money is gone. You can't get it back. Now, if worst was to come to worst and you invested your money into an ISA, you can take your money out at any time. So if you lost your job, you can access that money and it'll tide you over until you get a new job. One last disadvantage of overpaying on your mortgage is that you need to realize that if you are decades away from paying off your mortgage, then you have inflation actually working in your favor. So if you can imagine that £100,000 mortgage in 2026 won't be worth the same amount in 20 years' time. So inflation will actually erode the power of that £100,000. And when you couple that with the fact that your house will actually go up in value, and it's very likely to go up in value over time, these are things that are working in your favor. I can see why people who are maybe 5 years away from paying off their mortgage would want to hammer it. But if you're decades away, you will have inflation and capital appreciation working in your favor. So to conclude, if you overpay on your mortgage, that money is gone. And you have to bear in mind that if you fall in hard times, you can't access that money. So if you are completely dead against investing your money, one thing that you can do is take that excess cash that you have, maybe it's £100 or £200 each month, and put it into a high rate, easy access savings account. Typically, you can get somewhere between 4 and 5% at the moment. So this is a way that you can save that money. And when you go to remortgage, you can speak to your broker and see if you pay off £10,000, for example, off your mortgage, is it going to get you a better rate? And you will have all of the figures there. So you need to ask your lender, if you pay off your mortgage, what will the effect be? So that's a way that you can get the best of both worlds if you don't want to invest at all. So put it into a high rate savings account. It's easy access. And when you go to remortgage, you can get the numbers and see if you're better paying off the mortgage or keeping the money. And perhaps when you get those numbers, you might find that it's not going to have any actual effect on your mortgage and you can invest the money then. Now, I personally would not pay off my mortgage because I'm about 20 years away from paying it off in full. So these things are very person specific. Have a look at your mortgage deal, have a look at your mortgage rate, and also have a look at your risk tolerance. So what you want to do is try and have your money working for you as best as possible. And if you can do that while you're young and let things compound over time, you are more likely to get a better return on your money by investing your money. What some people will say is they want to pay off their mortgage fully and then they will invest their money. Now, I think that that's a risky situation because yes, you'll have a paid for home, but you won't have an investment portfolio built up. And you also won't have the experience built up of investing your money month in, month out, and having that tolerance to the ups and downs of the stock market. It's much easier to build up that experience when you're younger, because if the stock market goes up and down, you have years to ride out that volatility, really. So that's one thing to consider. If you can do both, or if you can invest your money, you will stand to do better. So that's it for this week, folks. I hope that you've got some value out of this. What I've tried to do is show you that, in my opinion, and obviously do your own research, in my opinion, it's a better idea to invest your money. But that being said, if someone was to come to me and say that for the last 5 years they've been overpaying on their mortgage, that's great too. There's no right or wrong answer to this. It's better that you're thinking about these things, so you're trying to put money aside each month to do something positive with it. And if that's overpaying on your mortgage or investing in the stock market, both of those are great. You will get immense emotional benefit from being mortgage free. I can completely understand that. So as I said, if you're thinking along these lines, you're on the right path. So guys, thanks very much for watching this week. I hope, as I say, you've got some value out of it. If you can follow me and subscribe and like the video, that would be great. I'm trying to build this channel. I find that putting these videos out every week, whilst I have the knowledge in my head, it's very difficult, and it's much more difficult than I thought. So if you can like and subscribe and help me to share that message, and I'll try my best to keep improving my presentation skills over the weeks, then that would be great. So I'll see you next week. Thank you.